Good morning, good morning. How's everyone today? Hope you had a good weekend. It was pretty decent here in Muskoka, Ontario. Had some good weather, some nice sun. A chance to go swimming with the family. It was nice. And now it's time to track. Did a lot of work on the Aruja report. If you guys had a chance to read through that, I think it would be very important. Didn't, make sure you go through and read that. It's been extremely accurate with forecasting what has been taking place in the markets these last many months, with this buildup of momentum and then the profit taking, luring retail traders into getting in the wrong positions. I mean, we've tracked it. Euro, for instance, the Euro US dollar, boy oh boy, that has been a constant mistake. Retail traders taking the opposite side of the trades, just ridiculous, right? Totally ridiculous. And it just goes to show how retail traders are constantly being lured in, taking the wrong side of the trade. Always. Most of the time, I would say. The vast excuse me. The vast whoa. The vast majority of the time, I'd say. 90 to 95% of the time they're taking the wrong trade. Right? Pretty much. So, let's take a look at some more examples of what's going on here to determine what is likely going to play out. We see gold here. Look how long they are. 79% of traders are long gold. Okay? Only 21% are short. And look what gold is doing right now. Look at that drop in price that we're experiencing. That's quite significant. And, you wait and see what's going to happen, because these numbers are going to change once again. Price gets down here, they're going to likely cause chart patterns to lure retail traders into going short. Okay? Right now they're mostly long, but soon they'll switch them to short, as they have always done. So let's take a look here. Short oil, or mostly short oil. Long US Swiss. Middle 50-50 pretty much. Kiwi, Aussie, same thing. US CAD, mostly long, although you can see that they are starting to shift over. They used to be extremely long. Now not as much, but they're still long. US dollar, Japanese yen, mostly short. Pound, they don't know which way. Slightly favors long. Euro slightly favors long as well. When we looked at gold the last few weeks, we've seen their positions hardly budge. Right? We see back in December that they closed off a significant portion of their positions. Right here. December, which would be here. They close off a significant portion leading into January, which is why we got this massive drop in price. Okay? Because they were closing off long positions. And then at the lows, they've been increasing those longs back again, causing price to rally. So now we're seeing the price drop, but we're not seeing any significant closures of long positions. So let that be, take notice of that, because I believe what we're going to see is that price is going to drop and then reverse up. And the reason why they're not closing their long positions right now is likely because they're going to be focusing on adding more at lower prices. Now we can also see that over the last few weeks, they've also been adding to their shorts. So now you want to know why price is dropping. Right here on the weekly chart, it's associated with what is happening here. Okay, how they're adding to their short positions. Now, we've been told, and I know I hear this all the time from traders, that we've been told that we should be focusing on commercials. Now, I was just having a conversation with a trader over the weekend in regards to this. Now, if we were doing that, let's take a look at what data we would be looking at. Because right here, this portion of the chart, I have commercials right here. Okay, so if we were only focusing on the commercial side of trading, what would we be seeing? We'd be seeing that they are not focused on long positions, and short positions are the greater. Okay, so yes, shorts would work right now because price is declining, but longer term it would not work. It would not be working at all. In fact, if we were looking at shorts, we'd be seeing that they're closing off short positions. 361, 351, 348. We'd be saying, oh, that looks like they're closing off their short positions, maybe in preparation for reversing price. Okay, where the fact of the matter is, the reason why price is dropping is mostly because of this here. All right. So that's what we're seeing with the data. We're seeing an increase in shorts, and we're seeing price decline. Now, where is it going to reverse from? Or is it even going to reverse? I mean, why would it reverse? Well, let's take a look here. When we look at this data, we're in the 280s right now. Okay? And if we bring up the past history, 280s, last time we were in the 280s was May 26. Okay, so if we open up the charts and look at May 26, 2020, it'd be interesting to see what price was doing in May 2020. So let me just draw a square over that data. Okay, so the last time the institutions were holding positions of 288 and accumulating, this is where price was, right here on the charts. So you can see there's a lot of room to add to their long positions, which could fuel a very strong move to the upside. All right, so now let's put things into perspective. This is where we currently are. And the last time those positions were in the 280s were right here. Okay? So, you see the massive increase? There could be a massive increase in price like that. Now, the only difference is when I look at the short positions, they were very cooled off in the 25,000s. And if we look at current short positions, they are sitting at 79,000, which is more aggressive, that's for sure. Although we have been closing off short positions since the end of April. So that would be the only difference, okay? We could even go back further in time to look at 288s. Okay, we passed by May. Let's find the same dynamic. 280s. What did I say the shorts were at? Let's double check. The 80s. So 280s and 80s. So let's see, 280s and 80s right here. Have a look at this. So this is a time in history where long positions were in the 280s and short positions were in the 80s, right? We have end of April 2017. So let's see if it's in the same context of where we are now. So end of April 2017 would bring us back. Let's see how far back we need to go. End of April 2017, February, March, April. Right here. End of April, right here. Okay? 2017. So that's where it was. In fact, let me draw a circle around it like that. That way we can zoom out and take a look at the context of where price was. Okay, we saw a drop and then eventually price went higher, higher, and then continued sideways. Well, if we put that into a higher time frame context, we're looking at 2017 right there. This area here. Right here. Okay? Price was in consolidation based on the higher time frame. It was ranging in consolidation on some time frames, ranging on others, in preparation for a breakout to the upside. So, are we in the same context? Well, let's examine that. So we had that happening here after a big rally, a drop, ranging, eventually breakout. Well, we had something similar like that. So if we look at this big increase here in price and then this big increase in price, we could potentially see something happening similar to this situation here. We could. So one of the things that would help us to determine whether or not the same move is going to take place is if we watch how they increase their positions, take profit on their positions, see and examine what they did back in the 2017s, what they did with their positions, and watch to see if they do anything similar with their positions moving forward from here. But as I've mentioned before, I'm not seeing anything on the charts that would indicate that that this is going to go like this down the chart. I mean, could it do it? Sure, it could. Yeah, the banks could do anything they want to with price. But is it likely? I don't think it's likely. I don't think it's likely at all. Okay? Going back to where we currently are with the data, we have 288,000. There's still room to go to 408. Okay, so remember, 408 is the all-time highs. The largest long position they've ever held is 408. We're only at 288. So there's definitely a lot more room to bring price up. And here's another thing. One of the things that we're always looking for when we are trying to determine if big momentum is going to come into the market is we want to know that the institutions are increasing a certain position, either long or short. In this case, we see that they've been increasing longs. And we also want to make sure that the sentiment is not extremely bullish, okay? Because when something's extremely bullish, that means they've already taken the time to get to that point, all right? When a currency is, or an asset is extremely bullish, that means they've already built up the momentum for the long positions. They've already thrusted price up in a certain direction. And so when we're getting the indication that it's bullish, that means it's already made its move most of the times, okay? But if you look at the current dynamic of what we're seeing right now on the chart, you'll see that the sentiment here is more blue. You see the coloration of the cells there. They're more blue, right? Previous to that, we had what? More green. So what does that tell us? That tells us that things were very bullish back in January, February of 2021. Okay, January, February 2021, right here, with that increase. Things were very bullish, and then price died down. Okay, now that was after a significant run in price. And if we go back here and take a look at the data, look at the sentiment here. This is January, February, March, April of 2020. Okay? That takes us all the way through here. Okay? It was very bullish. Price was down here, rallied up to here, and it was very bullish. But as you can see, a big percentage of the move had already been made. Now, did price continue higher? Sure it did. It sure did, okay? But take a look here. When we're looking at the summer of 2020, I want you to take a look at the coloration of the cells then. Neutral, okay? Now, one thing I always point out is to always understand the context of where price is. There is no just looking at positions and saying, oh, they seem to be very this or that, because it doesn't work that way, all right? Because if anybody was looking at this data here, okay? If anybody was looking at this data, they would say, oh, look at that. July 21st, the institutions have 334,000 long positions, 67,000 short positions. I mean, it's a no-brainer. They're buying gold. They're long gold. 83% of their overall position is geared to the long side. So I guess I should be going in long. Well, if you compare that data with the data from previous weeks' recordings, then you'd realize, yes, it was very bullish, but come the summertime, we're at its peak. We were at the peak, okay? So was it a good time to be buying gold? No, it wasn't. It was the worst time to be buying gold. So understanding the context of where we are and what they have been doing with their positions is essential. Otherwise, you will be timing the market at a very, at the worst time possible, okay? So let's scroll back up to see where we are right now. Here we are. So it's neutral. Does that mean that we should be sitting on the sidelines? Should we be buying? What does this mean? Last time it was neutral, it means don't be buying gold. Well, I would concur with that. And that's why we haven't been purchasing gold yet, is because we're waiting for it to go through the sequence that we call, okay, the sequence of events that we would expect price to go through in order to eventually get to the point where it's going to rally up hard again, if that is indeed what they're going to do. Because at this point, all we're doing is we're sitting at the poker table and we're watching all the cards be dealt out, and we're noticing that the last few rounds, the cards have been very low, okay? Or it's like watching blackjack. If you ever watched any videos on how the professionals were cheating at blackjack, one thing you would learn is that in blackjack, when low cards are being dealt, it doesn't work in your favor, right? And high cards are what works in your favor. And so what the players would do is they'd be watching to see all the cards being dealt out, and when they see a lot of cards that are low being dealt out, they stay out of those hands. When they start seeing that higher cards are being dealt out, they get into play, right? Because the whole idea is that if you were to play every single hand, over time, you're going to lose money, all right? So if you think about it, ace through, let's say, 10, ace through 9, right? You have 9 different cards there, ace through 9. Then you have 10, jack, queen, king, and that's it. 10, jack, queen, king, that's 4 cards. So it's 9 against 4. So if you kept on dealing cards, what do you think you'd get more of? You'd get more of the cards that work against you getting good hands, all right? So that's why the professional blackjack players would sit on the sidelines and watch this flow of how the cards are coming out. And when they see a lot of low cards coming out, they sit on the sidelines. When they see a lot of high cards coming out, that's when they come out. The trading is very similar in that we sit on the sidelines and we wait for the odds to be in our favor. I mean, the only way you can consistently make money in the markets is to know where price is going to go. I mean, that's just the bottom line. And I know there's a lot of people that say, you can't know where price is going to go. Well, that's not true. That's not true at all. And any member of our school would know that. There are ways to know where price is going to go. So we have to sit on the sidelines and wait for the cards to be shown. And a lot of times the cards aren't being shown, so we have to sit on the sidelines. We don't want to expect certain cards are going to be played or certain cards are going to be dealt. That wouldn't be a good idea. We want to see the cards. We want to know what they're doing. And then know, oh, okay, now they're showing us the signs of what they're doing. And then when it's very clear what it is that they're doing, that's when we want to get involved, right? So going back to this, what do we see? We see that the sentiment is neutral. So it wasn't a good time to be going long. I mentioned this to students, and I mentioned this in these videos too. Wasn't the time to be going long. Why? Because could price have continued up from this area at the highs? Yes, it could have. Was it likely that that was going to happen? No, it wasn't. And that was the reason why we wouldn't want to get in long. And those that did get in long, now, price is going against them. And they don't know how long it's going to go against them. Okay? Because at the highs, they thought it was going to go higher. At the highs, they thought it was going to do this. So when it starts going against you, now you start second guessing. Well, maybe my analysis isn't the greatest. And if it goes down and I'm watching my account going to the minus, how much is it going to go? What am I going to do if it goes here? Do I stop there or do I wait? Do I stop there? Where do I pull the trigger? And that's the problem with a lot of traders. They don't know where to pull the trigger. So what I prefer to do is I like to wait until the banks create the formations that they would need in order to facilitate a bigger move to the upside. Once I see them do that, then I am getting the go-ahead to get involved in the market. But I want to see that first. So let's take a look back at this chart. Okay, so we had some nice downside pressure. Again, we see the neutral sentiment. But overall, we've been seeing that they've been accumulating long positions, and we are very far away from all-time highs. So this is good news for me because now this presents for me a new opportunity to get into a position very soon. It's not quite there yet, but it's getting there. And that's a really, really good magical formula, is when the sentiment is neutral, but they're starting to accumulate a position aggressively, like starting to, because you know that you're gonna get in, and when price starts to pick up, this sentiment will start to turn bullish, but you're already in the position. So you get in early, momentum starts to pick up, and then price will shoot off to the moon, and you're already situated in a nice position. So I think that's looking pretty good for gold. I think it's looking pretty good. It's getting there. It's not quite there, but it's getting there. Okay. As for the dollar, we were talking about it perking up last week. You remember NFP? Okay. This was NFP, that drop in price. Okay. It wasn't matching what the analysts thought or what they were expecting from NFP data, so it was considered to be negative. Well, how negative was it if it got to this level and then it's been nothing but uphill since? Okay? If it was very negative, why is price rallying up in price? If fundamentals were everything you needed to trade consistently, why is it going up? If the fundamentals were showing that there isn't enough job growth to be positive for the US dollar, why did price rally? So that's my point. That's the point that we always are trying to point out here, is that the fundamentals are only used to lure retail traders into taking bad trades, okay? Because if you were basing your trading decision on fundamentals and you got in on this drop, if you didn't get out soon afterwards, you'd be holding a position in the minus right now, okay? If you were holding that. And how many traders are holding that? I don't know. I would guess a lot are holding that if they didn't get out. All right. So that's not the greatest way to trade, in my opinion. Use that information to understand why the banks are doing what they're doing. All right. As everybody was selling, who has to provide the opposite side of that trade? The banks have to provide the opposing side of that trade. So as everybody was selling, causing price to drop, the banks were buying. So did they take a loss on those trades? The banks who had to take the opposite side of those trades? Are they losing? Not really. Do you think they're going to lose? Unlikely. All right. I mean, I don't see where the banks are consistently losing the markets. I don't see that. I see where they're consistently making money in the markets. So we perked up a little bit from demand, and now price is sitting in the middle of an ocean here. We got a dock here, and we got a dock here. And we sailed north from the dock after fueling up, and now the winds have died. So now what? Now what? The winds have died, so what's going to happen now? Well, price can go in any direction, really. It can go up, it can go down. It's really hard to say. But since it left the dock on the southern part of the map, and it started heading north, then you can make a safe assumption that it's probably going to continue in that direction. Probably, all right? Not 100%, but it's more likely to continue north than it is to stop, reverse, and head south. That's all I have to say. But remember about the time frames, right? And the expectations from the time frames, which I have outlined for you up here. And I've kept them up there during these sessions ever since. Because understanding these is so critical to understanding what price is doing on each time frame. And what to expect from each time frame. It's critical. And now we've already laid out to you numerous times about the supply and demand dynamic that's playing out in the charts. And we know that there's more supply that's been put into the market than there is demand. So if there's more supply that's been put into the market than there is demand, then that should automatically lead you to suspect that price is likely going to continue going downwards over the longer term. And longer term and very long term, we're talking about multiple weeks, multiple months. Okay? Multiple months. Could be 4, 5, 6, 7 months. And very long term, multiple months to multiple years. Okay? By the dynamic that's in play. So that's what I'm seeing with the dollar right now. That big rally up, a slight push to the downside. This can continue to the downside at any point if it wants to. If I look at gold, switch back to gold here, and we're looking for some timing because we'd like to know if price is going to reverse, where is it going to reverse from? What time frames are we looking at? What should we be focusing on? Well, I can say there's a very good chance that gold reverses to the upside within the next couple weeks. Okay? 2 or 3 weeks. Good chance. So it all depends on what takes place over the next, I'd say, a week or so. Whatever happens over the next week or so will give us a better indication of what to expect in the coming weeks. So we're going to be watching that over the next couple weeks to see what the banks are doing, because we're watching them play their hand. Okay, we're just sitting back watching the banks play their hands, and we're watching everybody else who wants to make money at the table playing cards, not realizing that there's any way that you could be observing what is taking place to be able to have an edge in your game. So we're just sitting back and watching. And the great thing is, we can sit back and see what retail traders are doing. We can see how they're playing their cards. We have all the information here. Okay, we can see that they're mostly long, which is exactly what the banks would want them to be doing. So they're losing money. So wait over the next couple weeks. We'll be watching the sentiment with gold as well, because I'm sure it's going to be very revealing. All right, very sure of that. We'll take a quick break. You want to hit the like button for me? I'd appreciate it. What do we got? Only 22 likes. We got a room full of you. If all of you could just hit the like button, I'd really appreciate that. I'll go through some of your messages and see if there's anything specific that you guys are mentioning. Let's see. Exactly. I'm assuming the heavier shorts now are temporary to get price down to demand, and then next week we will see more shorts closed out. Very, very well put, Sirif. Yeah. The idea is, for price to get down to areas of demand, the banks would need to increase short positions. Okay, either increase short positions or take major profits on long positions. When they take major profits on long positions, that also causes price to drop. Okay, so it'd be one of those two things. Anybody search the current news in gold? What are they saying about gold right now on Google News? Anybody know? Let's take a look. Be interesting to see. Gold price. Well, it's already too late, right? Price is already dropping. But what were they saying back in early June? June 1st. Gold prices fall as Fed balance sheet hits 8 trillion. Okay? See how there's always an explanation for why gold price is doing what it's doing? It's also a thing that they do because, if they told you back in the beginning of June that they had reason to believe that price was going to head higher, right? And then price doesn't head higher, what are they supposed to say? What are they supposed to say? They're not going to come out and say, hey, we got you, sucker. You believed us, right? What they're going to say is, a week later, they're going to come out with reasons why it didn't go higher. So that way you can be like, oh, okay, well, it was true at the time when they said it, but then circumstances unfolded that were out of their control, which caused price to drop. So now you remove the blame on them because you're thinking, well, they couldn't have known that, right? And that just helps to continue with this myth that the markets move based on things that are happening in the world, based on whatever is happening out there, and it really has nothing to do with that. And we pointed this out so many times. Okay, when you're really focusing on what is moving price, you'll begin to see that if you never looked at the news again, never considered the fundamentals ever again and just focused on the supply-demand dynamic and what the banks were doing, you would never be confused as to why the market is doing what it's doing ever again. Never. Never be confused. So when price is at the highs, remember what we said. They lured people to go long gold. They lured them in. And this is at a point where the institutions were shorting. So let's take a look and just put this here, keep this on the side here. Gold prices end with a modest loss, hold above the 1900 mark. That sounds bullish to me. Sound the bull market. Gold sees best month since July. That sounds pretty bullish to me. Gold price to extend its downfall below 1895 support. Okay, that one not so much. Gold price prediction. Price rise as the dollar falters. Oh, price prediction. Prices rise. Okay, well, that didn't work out so well, did it? Those who listened to this news here thought, okay, I guess I should get in. Okay? Guess I should get in. And what else we got? Gold pauses Tuesday amid solid price uptrend in place. Ooh, solid. Yeah. Gold pauses Tuesday amid solid price uptrend in place. It's a solid price uptrend. Well, it doesn't look so solid today, does it? You see what I'm saying? I mean, I will constantly point this out. It took me a long time to see it. It took me a long time to realize that this system that they have in place does not favor us, period. Okay? They don't want people thinking critically. And when I say they, it's those who are controlling the markets. That's the they. You can research largest banks, HSBC, Citibank, JP Morgan. What's the other one? The HSBC, which I mentioned, Citibank, JP Morgan. There's a few others that are involved in these markets. The big players. They don't want critical thinkers. They don't want people to think logically. They don't want people to do any of that. They just want to say, here's what you need to know. This is what's likely going to happen, and base your decisions off of that. And if you're not basing your decisions off of that, use the indicators, use all this other information that is not based in reality to make your trading decisions. And guess what? If you use those techniques, then you're going to be long gold right now. All right? What will be fun to watch is what they're going to say now. Okay? As price drops down, and like I said, my suspicions are over the next few weeks, we're going to see the banks start to accumulate their long positions again. So let's follow the news and see what they say. Are they making it sound bullish anymore, or is it all about weakness? Gold price outlook rolling over through support. Okay, weak. Gold prices, like if somebody told me you have to buy or sell gold right this instant, I'd be buying gold right now. Okay? I wouldn't have wanted to buy gold at the highs, but now if I had to make a decision, I'd be buying gold. But if I was looking through the news, what is there to support my buying decision, right? Gold prices fall as Fed balance sheet hits 8 trillion. No, that has nothing to do with it. Gold is not dropping because the Fed balance sheet hits 8 trillion, okay? The Fed balance sheet was already astronomical when it was rallying up here. All right? So why didn't they say anything about that? Why didn't they say gold is rallying because the Fed balance sheet is 7 trillion? Why didn't they come up with that? You see, That's critical thinking. That's applying logic. Well, if you use that same logic, that price is dropping because the Fed balance sheet is so high, why didn't you use that same logic when price was rallying? Do you know why? Because that's not the reason why gold price is doing what it's doing. Okay? That's the answer. That's the answer. If the logic is different for both situations, then that means it's not based in reality. It's just something that is being used for the time being. All right? So just that alone should tell you that when they come out and say something like that, it's just, they're just coming out and saying whatever. They need to come out and say, well, I know we told you it was bullish back in June, beginning of June, that strong trends, uptrends were in play. Solid uptrends were in play on the charts. But I mean, it's dropping now because, the Fed balance sheet is $8 trillion. And your average person's not going to say, wait a minute, well, why didn't that matter before? They're not going to. They're just going to say, oh, okay, yeah, all right. Like this 8 trillion just appeared in a week's time or 3 days time. No, it didn't. Okay? So you see how it's not based in reality. Gold prices can go anywhere next week. Analysts look to buy the dip. Okay, that's pretty decent. That's pretty decent. It could be a little bit too early, so I'd be careful. Gold weekly price forecast. Gold markets continue consolidating. That was 2 days ago. Okay, and then it dropped. These are all 2 days, 2 days, 2 days. So that's the recent. That's not recent enough for me. So the latest is gold is rolling over. And gold is dropping because of the $8 trillion. Okay. All right. Well, what do you think of that? Okay. What do you think of that? Let's see what other comments you have. The likes went up a little bit more. I appreciate that. There's still a few of you watching right now that haven't hit like. If you could just take that mouse and move it up and click it, take you 3 seconds, and I would greatly appreciate it. Because the information I think I'm sharing with you here, this is like gold. This is gold. All right? This is gold. This will keep you from losing money. And if keeping you from losing money just gives you a little bit of a move up with your mouse to click the like button, I mean, isn't that a good trade-off? So yes, see the wave coming, so we start paddling our surfboard to get ready to ride that wave when they make their long out of this demand zone, most likely after a break. Yeah, so exactly, it's like you're surfing, right? And you want to catch that wave. You don't want to catch the wave that's just about to crash, because you're going to crash with it. You got to wait for the momentum to come in, and then you go, then you strike. Although price at demand is not a signal to go long, that's correct. Let's see. Good morning, Jin. Let's see what else we got. It's like those scamdy cappers, not sure, in sports betting. You pay money for, and they tell you to take the wrong team, and the other side wins the game. I learned their game. Your angle woke me up to how similar these chicken heads on major media and online tell retailers to do the same thing. Yeah, of course, it's like that. They don't teach finance and budgeting in high school on purpose for these similar reasons. I graduated high school in 1999 and learning as much now as those who got the highest degrees. Yeah, so, what you apply to be the truth in the markets, you can apply to be the truth in regards to just about anything. How one thing is done in one area of life, it's done in other areas of life. It really is like that. And as a professional trader, I know this to be true because trading is my life. Okay? So this is what I do for a living is I study this and I look into it. I put in the work that most people would never even think about putting in. So, and the results of putting in that amount of work is to see what most people would never even see. So I'm sharing that with you. I'm sharing with you with what I'm seeing and what we should be focused on. All right. I said I'd go through euros, so let's just quickly go through that before I let you go. So we got that push to the downside. Now it's contacting that area of demand that we already were looking at last week, right here. Contacting it deeper than the first test. Yes, can we get a move up? Yes, but the pressure is more to the downside over time. So short term, we can get a move to the upside, sure, no problem. But I think midterm probably see more downside. With the understanding that longer term we are expecting things to go up. All right. So if you can make sense of that, then you understand the complexity of the market. It's not as simple as saying it's going to go up. Okay, on what time frame are you looking at? Okay, it's going to go up. Yeah, it can go up on the 4-hour chart and get up to here. But then that's just going to look like something like this over time. So that's downwards on another chart, right? But over time, it can look like this on a weekly chart. So you see, and on the monthly chart, it would just be a little blip to the downside. So if you were looking at the monthly chart over the longer period of time, it would be a move up. Over a 4-hour time frame, 4-hour chart, it's a move to the upside. Daily, slight move up, then down. Weekly, more down, and then up. So this is how you got to see the multiple time frames. You got to see the moves that are expected on these multiple time frames. Let's quickly take a little peek at Bitcoin 40K. So, are we surprised? Are we surprised with this movement? What did we say? For the longest time, if I was a buyer of Bitcoin, I'd be buying at 33. That's the only place I'd feel comfortable buying. Why? Because I know that the last time that the banks were buying, it was in this area. So I wouldn't want to buy anywhere else except for the areas where the banks were buying. That's where I'd feel most comfortable getting in a long position, is where the banks were buying. So banks are buying once again. After they threw out all the retail traders that were listening to the news up here to buy, then they drop price, and now they're reaccumulating as everybody is getting out of their long positions. Because that's likely what's going to happen as price gets up here. All those traders that got in and their accounts are in the minus, then now they're starting to think, well, it's not so much in the minus now. If it just goes a little bit higher, then I'll get out of my positions. And then the second they see it starting to curl back down, they're like, no! So they get out. And they freak out. And then it starts to turn back in. And those that were willing to hold a little bit longer, now those positions are less in the minus. But then it starts turning down. They're like, no, I can't hold this any longer. It's probably going to continue going lower, so let me just get out now. So that's that game that's happening. That's why I said targets here for longs would be ideal, because once you get into this area here, I suspect it's going to drop. How much of a drop? Don't know. Have to wait until price gets up there. Look at the lower time frame charts. It's like playing poker. It's like somebody saying, in a week from now, when you sit down at the poker table, are you going to play the first 10 hands or not? It's like, no, you know the system. I sit down at the poker table and I look first. I watch. I watch the retail traders. I watch the amateurs versus the pros. I watch the cards being dealt. And if I see good cards for me to play, then I'll play. If I don't, then I don't. So I can't tell you how I'm going to play a week from now or 2 weeks from now. I need to wait until that time comes, and then I'll see what's taking place. That's how I would do it. Okay? So it's looking pretty good for those Bitcoin holders. Hopefully they will manage to get out of their positions. Who knows? We'll see. I mean, there's a good chance that they'll be able to get out at some decent levels. I mean, I wouldn't put my money on it continuing higher, although it can happen. It can happen. I'd only feel comfortable being in long at the 33s and holding them now and putting stop losses below new areas of demand. That's what I'd be comfortable doing. Anything else, not a good idea. And there's no reason to be in long from higher up. I mean, we mentioned why you shouldn't be. We told you what was likely going to happen. It all happened. It all played out. So, should be no surprise to any of us, at least, right? Okay, so let's see. We'll end the session there. It's almost an hour, but I think we're good. Let's see. Correct, Jason. I'm long done with CNBC, Bloomberg, etc., and online major news sources. Yeah, good man. Good move. Let's see. You need to hit the like, guys. Not for Kevin, but for yourselves. No way you will find this type of information on YouTube. No one in the world is teaching this stuff because the principles are Kevin's own. Wait until you reach L3 and you will see what I mean. L2 is king. Even L2 is king, yeah. Level 2 is a whole different ball game, isn't it? What we go through on level 2. Whole different ball game. A totally new idea of trends and understanding the phase that the markets are going through. I mean, it's not that difficult to learn, right? You just gotta be there, learn, absorb, do the homework, and it's there. The information is there. Level 1 is the foundation. Yeah, level 1 is the foundation. I got an email from a student who said that they loved the information that we're teaching, but they just didn't agree with the fact that we were separating the information through levels. And it's like, well, you have to understand that in life, the answers that you receive when you're older are not the answers that were even available to you when you were younger. You couldn't even get those answers because your mind was not even at the point where you could even receive those answers. And in trading, it's the same way. If you were given all the information, level 1, level 2, level 3, you would never fully make sense of it. Why? Because you would never put in the work to understand the foundation of what we're doing. You would never put in the required work. And so you would be trying to skip through the line and go straight to the front just to get the information, but it wouldn't make quite much sense to you. All right? You got to learn the foundation. You got to focus. And